Are you looking at Wendy's core derivatives, ticker WEN, and wondering why it is flashing heavy sell signals on a long-term falling trend, while a small group of defiant traders insist it is completely undervalued at $8? Welcome back to the channel. Today we are diving deep into WEN, currently sitting at around $8.01. This asset is in sharp focus today because despite a sudden 3.6% jump over the last 24 hours, its long-term chart looks incredibly shaky. This derivative is tied directly to the performance of Wendy's, one of the world's largest fast food chains, giving traders leveraged exposure to its equity movements. It has captured the spotlight right now due to a massive spike in volume, leaving investors split on whether it is a dead cat bounce or a real market reversal. Before we break down whether this token is a massive discount or a dangerous trap, make sure to hit that like button, subscribe to the channel, and drop a comment below with your current strategy. Seriously, leave a comment right now, it helps the algorithm tremendously. Let's look closely at the technical analysis because the charts tell a very specific story. We are seeing a distinct, prolonged downward trend line that has suppressed the price for months. Every single time the price attempts to rally, it hits a heavy wall of resistance and gets pushed right back down. While this recent 3% daily bump feels excellent for short-term holders, the overall macro momentum is still incredibly weak. The key support levels are being tested repeatedly, and if those levels snap, there is very little historical price action underneath to stop a deeper free fall. Short-term strength is highly visible today, but the macro weakness is still dominating the asset. If you look at the algorithmic trading signals and technical analyst sentiment, the consensus is leaning heavily toward a sell or strong sell. The negative signals are piling up on the higher time frames, and the short-term outlook suggests that this minor 24-hour green candle might just be a temporary relief rally designed to liquidate late short positions before another drop. This brings us to the ultimate crypto debate. Is WEN criminally undervalued, or is it a classic value trap? The bulls argue that because the market cap rank is sitting way down, around number 7900, any sudden influx of capital, community hype, or parent company upgrades could cause the price to multiply rapidly from these low levels. But the bears argue this is a trap designed to lock in exit liquidity for whale accounts. The downside risks here are massive. Derivative assets like WEN suffer from extreme volatility and erratic order books, meaning retail traders often get trapped because they buy in during a green hype candle and find themselves unable to sell without crashing the price further when the volume vanishes. If we look at the bull case, a best case recovery scenario requires a massive surge in underlying volume, fast food market growth, or renewed institutional interest that forces a strong breakout past key resistance lines. The bear case, which is the worst case scenario, shows a painful continuation lower where the token slowly bleeds out liquidity and hits new all-time lows. In the short term, expect choppy, highly speculative price action driven entirely by momentum day traders. In the long term, its survival depends entirely on whether the project can deliver real-world value or just remain another highly speculative digital asset. So, is this recent 3% bounce the start of a legendary reversal, or are you just watching the slow liquidation of a dying crypto asset?